Look, I think the key takeaway is that inflation is continuing to decline and quite sharply in this month. And so that 4.3% result in the month makes it quite hard or quite difficult to get a Q4, so the October, November, December months all together, a Q4 result that is larger than the RBA's current forecast of 1% for the quarter. What that means is because the RBA wants to see inflation falling and is not very tolerant of inflation not falling as quickly as it's forecast, because inflation has slowed, that suggests that we won't see a rate hike at their February meeting.
So in your opinion, how do you think the Reserve Bank will interpret these figures? Is it something they should worry about?
Look, there were a couple of categories that jumped out that pushed up the result a little. So we'd expected it might even be a little bit weaker. One of those things was holiday prices, so starting to rise ahead of that summer season. But generally, if we're looking across the board, there is a more broad-based continual slowdown, and that's what they want to see. They want to see that underlying trend, aside from some of the more volatile items, continuing to slow and giving them confidence that inflation is going to return to target within the timeline they have set.
Catherine, I should also note that this 4.3% inflation rate, that is the smallest annual increase since January 2022, so that's a good sign. Now, the RBA has also been worried lately that inflation is becoming increasingly homegrown and demand-driven. Is there anything in these figures to support those concerns?
Look, there are certainly some aspects, and you mentioned rent, for example, back to its pretty solid monthly rate of 0.7% in November after a bit of a decline in the previous couple of months, reflecting the larger than usual increase in Commonwealth rent assistance. And that is reflecting the very tight housing market and the very low vacancy rates that we've got within Australia. And I don't see those going away anytime soon. So rent price growth is likely to remain elevated for some time. Also on the housing front, we saw construction costs of new dwelling accelerate a bit during the month as well, which I think, again, is just showing that there are some constraints in the sector. We want to build a lot more houses to be able to get more people into them and loosen the market a little bit and put some downward pressure on prices and rents, but that's still quite hard at the moment.
And Catherine, sticking with the RBA, since they're a key player in this, there are some economists who argue the Reserve Bank has done enough and there should be no more rate increases. In fact, there are some who say the RBA has probably done too much by lifting rates so high. What's your take on that?
Well, we think that the cash rate has peaked at the current 4.35%, but we don't see any cuts until at least late 2024. And the reason for this is that, yes, things are slowing down, but inflation, even at that 4.3% that we saw today, is still well above that 2 to 3% target band. Yes, inflation is a lagging indicator, so it suggests that it will continue to decline. But the RBA wants to make sure that it isn't declining and then suddenly plateaus above their 2 to 3% target band. So they want to be really sure, and that's something that we're seeing overseas as well. For example, in the US, the Fed are really watching their inflation rate closely and want to make sure that it actually gets back to their target and stays there, because we have seen in past cycles inflation come down but then pick up again if rates are eased too quickly or aren't high enough. But we think at the moment we're at the right spot.
And I'm interested in your take on this, Catherine. There's been some criticism that all these rate increases have disproportionately punished those who are poorer. For example, those who have no choice but to rent and are continuing to see very high levels of rent inflation month after month. Do you think there's any way to get inflation down more quickly and in a more equitable way?
Look, monetary policy, the RBA changing the cash rate is very blunt. It's not a very targeted tool. Fiscal policy or government policy, spending and taxation, it can be much more targeted. And actually, we do expect that in the May budget, the government will be introducing some, I guess you could call it cost of living relief, that will support some lower income households who are more likely to rent. We have seen that inflation for for essential goods and services has been higher than for non-essential goods and services, which does hit lower income households more. But we think that fiscal policy is going to be the channel through which we see some relief, potentially in the May budget.